Trading strategies alone do not work. You need to have something called an edge in the market in order for you to be profitable. Now, everyone talks about trading edge, but nobody really explains exactly what that is. And more importantly, do you have one? So in this video, we're going to deep dive into what a trading edge is, why you need one, and most importantly, how to find your trading edge. If you've been winning some trades and losing others and not really sure what's working, you want to stay until the very end to get a full understanding of how to turn that around. So first of all, what is a trading edge? A trading edge is a repeatable advantage that you have in the market that tilts the odds in your favor. So think of it like this. If the market is a casino, most traders are playing as gamblers. But if you have an edge, that tilts the odd more in your favor, and this is where you can repeat that strategy over and over again and have a higher win rate on the long run. So an edge can be anything: price action, patterns, being able to read a certain indicator better than others. But here's the catch. It has to be profitable, it has to be consistent and testable. Testable meaning you should be able to back test it, and over the course of 100 trades, you should have a higher win rate, higher risk to reward ratio on that particular strategy. That's what defines an edge. Now, first thing, let's get something out of the way. What is not an edge? If you're constantly hoping for the trade to work out in your favor, that's not an edge. Having a hunch that the stock price might go this direction or that direction, that's not an edge. Following someone's tip on Twitter or a friend's tip, that's also not considered to be an edge. And most importantly, when you feel like the stock is going to go a certain way, going to go up, going to go down, that's most definitely not an edge. And lastly, strategies with unclear plans or triggers to enter or stop losses, that's definitely not going to be an edge, because this is going to bring you inconsistent results, which in the long run, you're not going to be profitable. Basically, without an edge, you're pretty much just rolling the dice and hoping something works. Sometimes you'll be green, sometimes you'll be red, but in the long run, you won't find that consistency that's going to help you become a better trader. So let's go over some things that can be defined as an edge. The first thing is statistical edge. You backtest a pattern over the course of 500, 300, 200 trades, and it gives you a certain win rate and a certain risk to reward ratio. If that strategy works out, that is defined as an edge, as a statistical edge. For example, this is not a real thing, I'm just making it up just to give you an example. If SPY closes consistently red for 3 days, on the 4th day, it has a pattern that it closes on the green side. Now, that could be an edge if you know how to properly trade it. Now, we're using statistical data to come up with a certain trading strategy that gives us an edge over other traders, because a lot of other traders now are most likely not focusing on this type of setup. So the second one is the technical setup edge. You're able to master certain patterns and have better entries than most other traders. For example, a lot of traders don't realize that when you're looking at certain patterns, there's a different pattern happening on the volume as well. For example, when you have an ascending triangle, right? When you have price constantly testing that high of the day and pulling back, on each retest, the volume usually lowers down. And as price gets tighter and tighter, we get lower and lower volume right before that big breakout happens. A lot of traders don't pay attention to that small detail, and because of that, they end up having a very bad entry. And one other thing I want to mention is a lot of traders don't know how to use indicators properly. Right? So when you are looking for an edge and you want to focus on a certain indicator, make sure you master that indicator. Don't focus on trying to add multiple different indicators on top of that, because that's only going to confuse you. Being able to read a single indicator better than majority of other traders is also considered to be an edge. So I mentioned volume earlier, right? That's something I use very heavily in my trading. I think that gives us a lot of direction as long as you know how to use volume in line with price action. So reading things like unusual option volume, level 2 time in sales, volume profile, right? All of these fall under technical edge. And even though most traders think they know how to read an indicator, the reality is they just skip through it because they're always focused on trying to make profit. So people don't really actually find their edge because they're constantly just jumping from strategy to strategy. Then we have something called behavioral edge. So behavioral edge is when you're faster or being able to execute on your plan much quicker than other people. You'll be surprised, a lot of traders are actually not great at following their trading plan. Some might be able to come up with a great trading plan, great entry, great stop loss, but when it comes down to execution, right, it could be on executing on the stop loss, executing on taking profits, scaling out, whatever the case is, they're not able to press the trigger. And because of that, they either get caught or they leave a lot of profits on the table. Now, if you're somebody who's able to close your trades quicker, take profits, scale out right exactly where you plan to take your profits, that is actually a very strong edge that most traders don't have in the market. This can also help you eliminate having excessive losses in the market. And one last part of the behavioral edge is being able to control yourself during a volatile price action. So I'll give you guys an example. When we have a certain economic event, Feds are speaking, or you have the GDP numbers or something that can move the market, if you usually wait for that price action to actually digest that news and then take the trade, that's also called having an edge, because most traders, when they see price reacting on certain news, they like to chase it. They like to go after those kind of setups and they end up burning their account. So if you're able to contain your emotions and not chase those volatile moves, that's also considered to have an edge. Now let's go over the main part that you guys have been waiting for. How do you find your trading edge? Right? You're probably looking for me for an answer, but the reality is the answer to this question is in your trading journal. Tracking your trades from the beginning, meaning start of the year, start of the week, and going over each trade, that's gonna help you find your edge that can help you actually become profitable or help you increase your profits. So first step is make sure you guys are logging your trades. You can use TradeZilla, import your trades, and go over your trades, your entries, your exits, your stop loss, why you took the trade, what was your stop loss, why you decided to close the trade, right? Making sure to write each and every single one of these things after you've completed your trade is highly important, because when you go over your 100 trades, you'll be able to find that common denominator of something that you're able to do much better than majority of the other traders. So without journaling, it's pretty much a guess game. Every athlete out there, anyone who's in sports or anywhere where they're trying to get better, they journal or they go over their previous track record to see how they can do better and if they're even getting better or not. Once you've started to track your trades, the second step is obviously reviewing them. I have access to something called Mentor Mode on TradeZilla, which allows me to go over my students' trades. And I see that a lot of them just import the trades and they don't really give any detail about it. They have zero data that can be used, such as the entry, exit, stop loss, why they took the trade, what was their stop loss. And when I ask them, hey, what was the reason you got in this trade? And if it's trade that's 2 weeks old or 3 weeks old, they have no answer. So when you're looking at those old trades, how will you actually know why you did well or why you didn't perform as great as you thought? So after 50 to 100 trades, focus on your winning trades. See what you did that helped you become profitable on those 50 to 100 trades. What are the things that they have in common? Where was the entry? Were they near a key level? Did you have better sleep? Did you have better pre-planning? What was the reason that helped you become profitable on that trade? Your edge is going to be hiding within that data point. Journaling is like dissecting your trades in order to find the good, the bad, and the edge that you might have hidden somewhere. So I'll give you guys a small example. If I go over my last 50 trades, right? And I see that majority of those trades, I held my losing trade slightly longer than I should have. Meaning, if I had cut my trade right exactly when it hit my stop loss, I would have been 10 or 5% more profitable, right? So what that happens is when I go over all my trades and I do the math of, all right, if I'm cutting 5% on each one of this trade, I'm actually making 5 to 10% more on the rest of my trades, because now the losers are being taken out much, much quicker. Now, being able to find that small detail and then just tweaking your strategy up just slightly is gonna help you immensely over a lot of other traders, because trust me when I tell you, there are traders that do not respect their stop loss. They let the trades keep going and then they might have $500 wins while their losses are now 300. Versus if they go over their previous trades and journal those trades properly and figure out that, hey, you know what, if I close this trade on my stop loss, I would actually only be losing 100. Now you save that $200 and you're able to have a higher profitability rate in the long run. The next thing is back testing. Once you find what strategy works for you, go on one of these backtesting websites, implement your strategy and see what the win rate is. I've made a video on this in the past. You guys can go check it out. But another way to kind of see how you can have better entries on the trades that you've already taken, there's a feature on TradeZilla called Replay. So let me show you guys how that works. You guys can see this is TradeZilla. This is one of the trades I've taken in the past. All right, Meta, March 20th. My net ROI on this was 65%. So that was a pretty good return on this trade. So you guys see this was slightly a late entry. Usually I trade the opening range breakouts. So how could I have made this trade better, right? So there's two ways of going over your journals and figuring out. One is, just pretty much looking at where your entry was and trying to figure out, all right, this is the 15-minute opening range. If I had gotten in at this retest or this break and pullback, this would have been a much better entry. The second way is called the replay function. That's the function that you guys see right here, right? So when you hit replay, what it does is it's gonna take you back to that time, and I'm gonna switch over to 5 minutes, and based on where you got in, right, you can kind of change that time and go look at around that time to see what was happening with the price action so you can have a slightly better entry. So you guys see this on this pullback, this is where we could have had a slightly better entry point, because when we see this pullback happening and it starts to hold a previous level, understanding this after the fact gives me a better perspective as to, all right, we're coming back for the retest. This is where I should have taken the entry. So I would have had a slightly better entry point and a better fill rate, right? And this will pretty much show you candle to candle where you jumped in, right? So you see I jumped in right after the breakout. I could have jumped in before it actually broke out, once that candle closed and held that particular key level. And now these things you're not really able to see until after the price action is done and you're journaling your trade and you're dissecting your trade to see, all right, this is how I could have executed on this trade much better. Once you guys have found what works for you based on everything that I went over, right, next thing is cut the bull. Remove the indicators, remove the concepts that don't work or align with the way you trade, right? You look at someone on social media, you want to start adding multiple screens like the ones you see behind me, or you want to start adding multiple indicators. If it's not working out for you, take it out. Don't add it on your chart, because the only thing that's going to do is confuse you, and it's going to come in the way of your execution and your trading edge. Once you guys figure out what your trading edge is, focus on protecting it. What that means is don't just take boredom trades, don't take random trades, wait for your setup to form, and that's when you should be taking a trade. So for example, if your trading edge is trading the 30-minute opening range, so the 30-minute opening range is where you wait for the first 30 minutes to form, you take the high and you take the low and you wait for that break, and then you take the trades. The rules are pretty simple for this strategy. You wait for the first 30 minutes to set up. If you're taking any trades before that, that means you're breaking your rules. That means that setup might not align with your trading edge. And if that trade doesn't work out, the chances are now you're going to be in the red. And what usually happens is people move on to that and they think my trading edge isn't real. This is not working for me. But in reality, they actually didn't follow their plan. They didn't follow their actual trading strategy, which was telling them that they have to wait until the first 30 minutes are completely done. So just to summarize everything, make sure your trading edge is repeatable, test it, use TradeZilla, go over your trading journal, make sure it's testable, which means go over your previous trades on your TradeZilla or any trading journal that you have, go over your historical data, understand what works, what doesn't work for you, and try to limit your losses. Make sure it's scalable, which means that you can size up and that edge is still there when you start sizing up. A lot of the times people don't realize that when they do find a trading edge, it only works with a certain position size. And lastly, make sure it's sustainable. Create rules that can work in every market, and make sure you have a certain plan that tells you what your trigger to enter is, what your stop loss is going to be, and you follow that checklist before you jump in. Without your edge, the strategy is not going to be helpful at all. So make sure both of these things go hand in hand with one another. Now, remember one thing before I let you guys go. Most traders fail not because they're not smart, but mainly because they switch from strategy to strategy. They're constantly in a guessing game and they don't focus on trying to find an edge. This is a game of finding odds in your favor and being able to have an edge that tilts those odds in your favor more than other traders. Find your edge, refine it, make it as better as you possibly can by journaling, and trade it like a robot. Follow it down to the T. I hope this video helped you guys. If you want me to cover any other topics, comment below those topics, and I'll see you guys in the next video.